All right, today we're tackling what is a really unbelievable contradiction. In 2025, the Indian startup ecosystem saw funding hit a pretty solid $11 billion. That
Yeah.
sounds great, right? A thriving market. But at the exact same time, major iconic companies, I mean, household names, they
Mhm.
just vanished.
hmm
So what happened? Why did this massive split occur? Why didn't all that money save some of the industry's biggest players?
Well, the sources we've looked at are really clear on this. This wasn't just a slowdown, funding winter. It was a fundamental shift. The whole era of founders being able to rely on just
Yeah.
constant capital infusions to paper over flaws,
No.
that's over. So what we saw was less a funding winter and more of a governance
A
guillotine.
governance guillotine. I like that.
Yeah.
So sharp, so immediate. So let's start with that top line number, the $11 billion. It sounds encouraging, but what does the data really show us is happening underneath?
This is what's so fascinating. It's all about selectivity. While the total capital was high, the actual volume of deals just plummeted. We're talking about nearly 40%. Only about 1,500 deals in total. VCs were writing much bigger checks, but only for what they saw as the absolute surest bets.
And that pullback was felt most at the bottom, right? At the seed stage.
Oh, absolutely. Seed funding crashed 30%.
Yeah.
Investors were actively refusing to fund what they were calling experimental bets, especially if it was just mimicking some of the U.S.-style AI hype. They wanted application-led businesses, period.
So the squeeze was on, and that's where it gets really interesting because that pressure is what exposed all the structural rot.
It just forced accountability.
Yeah.
I mean, that capital squeeze, it
Yeah.
immediately exposed these really deep structural issues. You saw BluSmart collapse. And it wasn't just the market. It was a major governance scandal with its sister company, Gensel.
And then there was Dunzo. Everyone loved Dunzo.
Everyone did. But they simply couldn't make the math work. The unit economics just weren't there against the deeper-pocketed quick commerce giants.
It must have been a brutal year for founders. But the analysis uses this powerful image, calling the shutdowns a forest fire.
Exactly, a forest fire.
It looked destructive, these big, visible trees burning down,
But it functionally cleared out all the deadwood, all the bad business models.
which means the fire-resistant companies could actually thrive. So if the market was cleaning house, where did all that capital go?
It rushed straight to the survivors. The analysis calls it a high-stakes poker table. And only the players with a royal flush, and by that I mean profitable growth and squeaky clean governance, were left standing.
A huge consolidation then.
Massive. Only 22 companies raised rounds over $100 million. That's way down from 35 the year before. And that's how you get a company like Zepto alone commanding a staggering $7 billion valuation.
And if we connect this to the bigger picture, this newfound stability, it has global implications, right?
It really does. Global funds now see India not as this risky bet, but as a critical hedge. A hedge against the potential bursting of the global AI bubble.
Which is what's setting the stage for what the sources call an IPO supercycle for these giants in 2026.
That's the key takeaway.
So for you, our listener, the takeaways are incredibly sharp. For founders.
Yeah, for founders.
Yeah.
Stop optimizing for that next bridge round or that next valuation. Start optimizing for audit-ready, crystal-clean governance right now. If the unit economics don't work without more cash, 2025 proved the market will not bail you out.
And for investors.
For investors, the signal for 2026 is that boring is beautiful.
Right.
Look for the steady compounding, the clean books. Forget the flashy AI narratives. India is now the rational counterweight to global tech volatility.
So we'll leave you with this to think about. Given that over 6,300 startups failed, what does the market need to do institutionally to make sure this audit-ready governance is baked in early enough to prevent these kinds of collapses in the future?
Let us know in the comment. This is The Flux Decoded by the Startup Junction. Subscribe for such insightful startup ecosystem-based contents.